How's it going today, guys? Welcome back to Stock Radar. I'm so happy to have you guys here. Hope you have been having a great week. Personally, I've been pretty busy. If you can tell from the background, I'm actually in a different apartment now. If you guys have been following up with the group for a while, you know I had a ceiling leak and it was never resolved and it just kept getting worse. So I said, okay, you know what, I'm just gonna switch apartments. I'm done dealing with this. But anyways, I'm back to like a normal setup here without having my desk just randomly in the middle of my apartment. So that's a plus, but it's been a super busy week for that reason. But if you were noticing a different background, that is the reason for that. But anyways, this week you guys voted on Costco as the stock we analyzed. It's a stock that I've been bullish on for quite some time. And I'm going to go over some of the reasons why I like Costco stock and also some of the reasons for concern, as we usually do here in Stock Radar. But first of all, let's go ahead and cover some of the basics here. The symbol is COST on the NASDAQ exchange. Their PE ratio is a 33.7, so they do have a slightly high price to earnings ratio, and we're going to go over that valuation in a little bit. They are a dividend stock. They have a 1.04% dividend yield, and they have a 14-year history of paying dividends and a 14-year growth streak. So every single year that they've paid dividends, they have been growing those dividends as well. And they have a market capitalization of $96 billion, and I would categorize them as a growth and income stock, and this company is 34 years old. So a little bit more background on what Costco is. I'm sure most of us are familiar. Costco offers a paid membership shopping warehouse. It's a discount shopping where you're buying things in bulk. It's very popular with customers for personal use and also business customers, people who are looking to buy goods for their restaurants or for their stores. Maybe you have a little coffee shop and you want to sell some granola bars or cookies or something there. You can buy them in bulk, get a discount, and then make more money when you sell them to your customers. But in order to shop at Costco, you do have to have a membership, and we're going to go over exactly what those are in a little bit because that is one of the main ways that Costco is able to make money. Now, Costco sells a variety of different products. They sell groceries, alcohol. I believe they are the largest seller of wine out there. They sell the most wine out of anybody out there. I think that's something I heard on Shark Tank from Kevin O'Leary, but I didn't have time to look into that. I really should have. But as far as I know, they sell more wine than anybody out there. They sell beverages, cleaning supplies, electronics, appliances, apparel, hardware, health-related products, and so much more. They're also very similar to BJ's. That's one of the biggest competitors, the BJ's Wholesale Club. So they're very similar. You know, they offer bulk items at a discount, and they also have, you know, different things available. So the Costco also operates gas stations. They operate pharmacies. They have food courts, hearing aid stations, and also travel services. Again, very similar to BJ's. And Costco sells through over 700 warehouses as well as through online. So they have both the retail sales, where most of their sales are happening in person, and then they also have the online sales channel. Now, like I said, I've been a fan of Costco for a while. This here is actually a video I posted on July 31st of 2017, so that was almost a year ago, and this was the first time I recommended Costco. They were trading at, I believe, $152.89 a share. So I recommended this stock as a buy in July of 2017, and since then Costco stock is up 44.4%. So stellar performance there with Costco, and that's kind of what I expected here. Was I was very bullish on Costco, and I saw a lot of reasons to be investing in this company. So moving on now, let's go ahead and talk about the valuation of Costco shares at this point in time. And it is my opinion that Costco is fairly or accurately valued by the market. And that's indicated by a couple of reasons here. So first of all, one of the things I like to look at is the analyst price targets for a stock, and they're right on the money. So among the 22 analysts, the low end is 200, the high end is 250 in terms of where they expect that share price to be. And the average is 220.45, and the stock is trading at 219.95. So there is no upside there with this stock. It's trading right where analysts expect this stock to be. And so that, again, is a reason why I believe the stock is fairly valued. Overall, the recommendation here is a buy. You have a couple people saying, okay, you know, it's a hold, a buy, or a strong buy. No analysts are saying the stock will underperform or that it is a sell. But then when we go ahead and look at the fundamentals here, we look at the PE ratio, the forward PE, and the price to earnings to growth ratio. We see that Costco came in at the highest here for the highest price to earnings ratio. They have the highest forward PE ratio but they don't have the highest PEG ratio. That one goes to Walmart. So looking at these stocks here, the main competitors for Costco are Walmart, Target, and BJ's Club. And then Amazon is the competitor to all of these, but we all know that valuation is sky high right now, so it really wouldn't be useful to compare those here to these numbers. But as you can see here, Walmart trades at a PE of 30.3, kind of similar to what Costco is at. BJ is a little bit cheaper. And then Target has the lowest price to earnings ratio at 17. And Target is a stock I would definitely enjoy talking about here in the group, so we should put that on for a vote. And I know Walmart's come close a couple of times as well. In terms of the forward PE, Target also has the lowest forward PE, and so by far here, Costco has the highest forward valuation on those shares. But looking at the price to earnings to growth ratio, BJ's Club is the lowest, Walmart is the highest, and Costco is actually second to lowest. So based on their anticipated growth, those shares might not be so overvalued looking at the PE ratio and forward PE. And then when we look at the dividend here, Costco comes in at 1.03%, Walmart at 2.35%, Target is the winner at a 3.18%, and BJ's Club is not paying a dividend. So in terms of income, if you were an income investor here, you would probably be looking at a Walmart or a Target, not so much a Costco. But I believe that Costco has more growth potential than the other two there in terms of Walmart and Target, mainly for their international growth potential, which is what we're going to talk about, maybe even on the next slide here. Nope, I was wrong. It's coming up in a little bit. But anyways, now let's go ahead and talk about the dividend. Like we said, they pay just over 1% dividend, and so I like to look at the coverage ratio to determine whether or not this company can really afford to pay that dividend, and they can very comfortably afford this dividend. The coverage ratio for 2016 was a 3.1, for 2017 a 3.2, and for 2018 a 3.0, and that's with them steadily raising that dividend as well. So Costco is in a great position to increase the quarterly dividend, continue to do so in the future, and I think they're going to be a great income stock down the road. So I see a lot of reasons to be, investing in this stock or considering this stock, maybe even just putting it on your watch list to keep track of. And then the main money maker here for Costco is in their memberships. They have a couple of different ones. They have the Gold Star membership, the Gold Star Executive, they have the Business membership, and then the Business Executive. And each one is either $60 per year or $120 per year. And this is where Costco is making the money. They're not making money, selling the products in their store. Maybe they're making a little bit of money, but most of the money they're making is coming from the sale of their memberships. And the good thing about them is they are very sticky. They have a lot of people that are renewing every single year. They have, as of the most current figures I could find, 86.7 million members of both the Gold Star and Executive memberships. They have a 90% renewal rate in US and Canada, and among small business customers, a 94% renewal rate. So they've created a very sticky membership where people are going to renew. They get in the habit of shopping at Costco, and then they continue to do so down the road. So that is what I like about this business here, is that the membership has a very high renewal rate. They don't have a lot of churn here, and people tend to be loyal customers of Costco as a result. So moving on here, let's talk about the pros of investing in the stock. I always like these recurring membership businesses as they have consistent income and a reliable stream of income, and they also know relatively what they're going to be making. And the other thing I like about this is that Costco is a value option where the bulk savings are passed along to the customer. And the other thing I like about this is that, just like with Amazon Prime, that Costco membership becomes more valuable the more you use it. So there's the incentive there to shop more on Amazon if you have Amazon Prime, or shop more at Costco if you have that membership. So let's say, for example, you're somebody who has a Costco membership and you're getting ready to go out there and buy your groceries. You're not going to go to a traditional grocery store. You might avoid Target and Walmart just simply because you have the Costco membership and you need to justify the cost of your membership. And then the biggest pro, in my opinion, for Costco is the potential here for international expansion. Right now, international revenue accounts for about 19% of total revenue, meaning 81% is domestic. And as of September 2017, they have 514 warehouses in the US, 97 in Canada, 37 in Mexico, 28 in the UK, 26 in Japan, 13 in Korea, 13 in Taiwan, and less than 10 warehouses in Australia, Spain, Iceland, and France. So this right here, I think, could be the big growth driver for Costco, is the international expansion. where they're going to get into these international markets and get a stronger foothold in Asia and in the UK and in the different countries that they are just emerging in, where they maybe have a couple stores, a couple dozen stores, get to the point where they have very strong international presence, kind of similar to Starbucks, where they have a strong presence in the United States, but also all over the world. Another pro for Costco is the Costco gasoline. Like we said, they have a lot of different services they're offering, and you might ask yourself, why would you care about selling gas? There's not really a ton of money to be made in gasoline. But the thing is, gas stations bring a steady stream of traffic to the Costco locations. So they build the Costco and they put the Costco gas station in the front near the parking lots. And what they found is that over 50% of Costco gas customers shop in the club while visiting the location. So what they've done here is they've paired this up to offer the convenience of being able to grab gas and run in and grab your groceries and do your shopping. And as a result, when people go to shop, they go, you know what, I might as well fill up my gas too. Or when they're going to buy gas, they'll say, well, you know what, I'll go to Costco, get gas, and also stop in and buy hamburger buns or whatever they need. So they've paired up two services here. And the gas stations make a lot of sense, in my opinion, as far as why Costco has these gas options available to people where they can fill up their gas while being at the store. And then another pro I have here is that value options like Costco as well as Walmart and Target. And so the competitors there are recession-proof investments. And that is because when money is tight, people will be more likely to shop at Costco or other discount retail stores. You're going to be probably giving up your Whole Foods and your Fresh Market and maybe your local produce. When money is tight, you're going to be shopping at these value options because you simply have to. And so on the bottom right there, that is the performance of Costco stock since 1983. And as you can see, around 2008, they had a bit of a pullback, but they really didn't have that much of a pullback in terms of what the overall market did. And so you'll often find that these investments perform better in a recession because people have more confidence in a stock like Costco because it's a value option and more people are going to be spending money at Costco as a result of not having enough to spend money at a Whole Foods or a Fresh Market, for example. So moving on now, let's talk about the cons of investing in this stock. And the cons of investing in any retailer right now is e-commerce, and namely it is Amazon. So e-commerce is a threat to all retailers. However, I do have to say that Costco does have a strong online presence. I just went and checked out their website, and they do have a very attractive website. I'm not sure what they offer in terms of free shipping or anything like that, but it does seem like they have a strong online presence, and so at least they are working on that and making sure they have that option available because more and more people are doing their shopping online. And there's also some changing in the habits of shopping that we're going to talk about on the next slide here. So another con for investing in Costco, like I had mentioned earlier, is that shopping habits have changed, particularly among young people, to more convenient shopping. And this is something I'm even doing myself, so that's also kind of why I've noticed this. But young people especially are making more frequent visits to stores and spending less per trips. I can remember when I was a kid, I'd go to the grocery store with my mom, and she would fill up an entire cart all the way, and that would be our groceries for the next 2 weeks, maybe even longer. And I've just noticed I've been seeing less and less people doing that, and I don't really see any young people loading up the cart and buying 2 weeks worth of groceries. It's more or less you make 2 or 3 trips a week to the grocery store, buy a basket full of items, and that's just kind of like how we shop now. I'm not sure why that is, but we are making less frequent trips to the stores. And so you're seeing less spent per trip, and as a result, you might not see people wanting to buy things in bulk, and that's exactly what Costco is offering, the discount of buying items in bulk. Young people especially might say, I don't want to buy a 4-pack of peanut butter. I know I'm saving money, but I'd rather just buy it as I need it rather than having to buy this and store it. So you're seeing less people buying in bulk, and people are shopping more frequently. And the other thing is also that young people are also more likely to shop small and shop local. They don't necessarily like shopping at the brand stores. We talked about this with Starbucks as well. People are shopping at local coffee shops or going there for their coffee fix as opposed to going to Starbucks. And it's just an overall trend we are seeing. But the one thing I will say is that business customers will always look for the best value because that's how they're making money. They're not going to be going to Walmart to buy their ketchup. They're probably going to go to Costco or BJ's because they can save money by using that membership and getting it in bulk at a cheaper price. And then another con for Costco is that the membership fees are really what allows Costco to be profitable. Without these fees, they would not be able to sell products at such low prices. And if membership renewal rates decline, prices will have to go up, and Costco could lose the competitive edge and also the recurring nature of being a Costco customer, where the more you use that membership, the better value it becomes. So that customer loyalty would dip as well. But as we discussed earlier, the renewal rates are very high for a Costco membership, so I do not see this as a threat at this point in time. Moving on, the barriers to entry for Costco. The main one is the brand loyalty. People are loyal to the brand, and also Costco doesn't necessarily have the same reputation as a Walmart does. I know every time I think about going to Walmart, I think about long shopping lines. I think about a poor shopping experience. And I don't have a Costco near me, but people who talk about Costco don't seem to talk about it in the same way. It seems to have a bit of a higher quality standard, and I think that is a big piece of why people shop at Costco. Second of all, economies of scale, because they are doing so much business, they can buy at massive volumes and pass that savings along to customers. Third of all, supplier and distribution channels. They have access to all of the different suppliers for the food and items they are selling in their stores. And then fourth of all, the startup costs would be extremely high to compete with a Walmart or a Costco or these massive retailers. So moving on now, let's go ahead and take a look at the financial documents, starting off by looking at the balance sheet. So total assets were flat from 2014 to 2015, but increased 10% from 2015 to 2017. So there was no crazy growth here in total assets. What we've been seeing, or what we're going to see here mostly with Costco, is some single-digit growth. Cash and cash equivalents declined from 2014 to 2016, but increased 35% from 2016 to 2017. So we saw a significant bump in cash and cash equivalents, and that again is due to the fact that we're going to see net income also went through the roof in that same time frame. Total assets grew 9% over the last 4 quarters. Cash and cash equivalents grew 29.3% over the last 4 quarters. And so what we're seeing here is about single-digit growth of total assets. However, that cash pile is growing at a significantly faster rate. So Costco is by no means a growth beast. If you're a growth investor, these numbers are going to put you to sleep. But if you're a value investor and you're looking for both growth and income, this is probably about what you're looking for. Moving on now, let's go ahead and take a look at the liabilities. So what we see here is that Costco has mostly short-term debt with some long-term debt. They do have a sizable debt load here, though, which we're going to talk about in a little bit. Total liabilities were steady from 2014 to 2016, but increased 21.3% from 2016 to 2017. So we saw a significant bump in total liabilities. And in the same time frame, total assets increased just 9.6%. So you like to be seeing assets growing at the same rate as liabilities, or assets growing faster than liabilities. When liabilities are growing faster than assets, that is not something that you're liking as an investor. So that is one thing I will say, is you want to keep an eye on the debt load for Costco as an investor. Total liabilities grew 7.4% over the last 4 quarters compared to 9% growth of total assets. That's better because the growth of assets outpaced the growth of total liabilities. And so Costco does have a sizable amount of debt. Total assets have some coverage of total liabilities, 1.44 to 1 in the most recent quarter. And like I always say, 1.5 to 1 is usually what I like to see as an investor. And then current assets have very slim coverage of current liabilities of 1.01 to 1 in the most recent quarter. So for all of their short-term cash or their assets that are readily convertible to cash, they have $1 in assets. They also have $1 in debt that has to be paid in that same time frame. So that's not really something I like to see as an investor. I like to see better coverage of current liabilities and also total liabilities. Now, when we take a look at the net income, the gross profit, and the cash flow from operations, this is where Costco really shines. So what you're going to notice here, especially in the next slide, is that Costco has very slim margins. A lot of these retailers do. It's just the nature of the business. In 2017, they did $2.6 billion in net income on $129 billion in revenue. So they have very, very slim margins. What we've seen here is that total revenue has increased every year since 2014 at an average rate of 4.7% per year. Gross profit has increased every year since 2014 at an average rate of 6.5% per year. And when gross profit outpaces total revenue, that means that they are seeing better profitability, which is a plus. Net income from operations exploded, increased 104% from 2016 to 2017. So they were able to generate more than double the amount of cash in 2017 than they did in 2016. So that is huge for Costco, and a lot of the reason why we've seen that the stock price perform the way that it has. Gross profit increased 8.4% from 2016 to 2017, and net income outpaced gross profit, another plus at a rate of 14% from 2016 to 2017. Now, here looking at the financial ratios, what we can see is consistency here. They're relatively consistent. The current ratio has declined a little bit, as well as the quick ratio and cash ratio. So, the asset to debt ratio is a little bit poorer than it was in the years prior, but we've seen consistent gross margin at 13%, operating margin at 3%, profit margin of 2%, a 2% profit margin. It's just kind of how this business is, the nature of this business, but it's very slim margins, but they're able to sustain themselves on 2% profit margins. And then moving on, let's go ahead and just take a look at the performance of the stock over the last year and over the last 5 years. So in my opinion, the improving financials and increase in net income as well as cash flow have been reflected in the share price already. Over the last year, Costco stock is up 43.7% compared to a 13.7% return from the S&P 500. So they've significantly outperformed the overall market. And over the last 5 years, Costco stock is up 83.5% compared to a 64.6% return from the S&P 500. So they've also outperformed over the last 5 years, but the bulk of that asset appreciation has been over the last year. Costco stock, in my opinion, is fairly valued at this point in time and trading near the 52-week high of $224.62. So this is not a time when I would go out there and be buying Costco stock. I would wait for it to come off that all-time high and buy it on a dip. Costco seems to have great durability and staying power with the potential to increase dividends, and I think they have a huge amount of potential with international expansion. But overall, like I said, I don't buy stocks at all-time highs. I would wait and buy Costco on a dip. But anyways, guys, that's going to wrap up this video. Let me know what you guys think over in the private Facebook group. If you guys have any questions, I'd be happy to answer those over there. But thank you guys for watching, and I will see you in the next video.